exchanges and certain cryptocurrencies kind of cater more towards the consumer demographic, but at the same time, what actually drives price action is institutional adoption and institutional activity. Things like that. That's what's going to get Bitcoin to like the holy grail of 100K. Welcome back, everybody, to another episode of WAGME TV. We have a great one for you today. Some exciting news with the launch of the EDX exchange. A lot to cover here today, and it's going to be very meaningful in terms of where crypto could be headed in the next few years. So we're going to dive in and cover everything you need to know. Matt, I'll hand it over to you.
Yeah, so I guess a really quick background. EDX Markets, it's essentially a new cryptocurrency exchange that was launched on the 20th of June, 2023. So very recent. The exchange is backed by massive financial institutions. Those are the likes of Citadel Securities, Fidelity Investments, Charles Schwab, all massive organizations that we've all heard of and are familiar with. It's obviously pretty significant, right? It shows that, TradFi institutions or traditional financial institutions are starting to take cryptocurrency a little bit more seriously. I think we wanted to have a more broad discussion today around why this is important, what it means for us moving forward, those sorts of things that are going to be important for us to consider as kind of retail investors. But I guess excited to get all your takes. But, firstly, what I was thinking of is from an importance factor, it could really lead to a lot more of that institutional investment in the crypto space. Before we hopped on today, we were talking about, Coinbase versus EDX. What are some of the major differences? I think the biggest difference is that EDX markets, you can only trade 4 different cryptos. So Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. So only the 4 of those. Obviously on Coinbase, you have 100 plus that you can actually trade with. So it's a little bit more geared towards kind of the big institutions and getting them involved in cryptocurrency versus Coinbase being more involved on the retail side, right? So of course, this is kind of that boost from a big industry that we were looking for quite a while, right? It provides a lot more and honestly much needed liquidity, a lot more stability within that market. So that's the first reason why I would say it's pretty important. The second is it could just legitimize cryptocurrency in the eyes of regulators, right? If traditional finance institutions are really willing to invest in cryptocurrency and willing to take those risks, it's less likely that regulators will actually crack down on that industry. We've seen a lot from the SEC lately. Who knows if this was kind of like in cahoots a little bit? I think that's going to be part of our discussion today. But I think those are kind of the 2 major things that I was thinking of when considering how important this is. And we've even seen quite a big jump in Bitcoin and some of the other cryptos in the space recently. But would love to get your guys' take on either of those 2 points, or if you have some others that you were thinking through.
Yeah, I mean, not only has there been a huge jump in Bitcoin, but there's also been a huge jump in GBTC, the Grayscale Bitcoin Trust, which is really, the previous attempt at establishing an ETF and something that's, we wanted to happen from the institutional side for a while now in crypto. And so, this isn't something that this is the first time it's been announced. So I totally agree with you, Mata. It feels like there's a little bit of, EDX being in cahoots with the SEC to be able to, launch this. But yeah, I mean, overall, it's a good moment for crypto. It's obviously bullish for Bitcoin, but to be able to bring more money into the space, high tide floats all boats, prices are just going to rise. So I think overall it's probably good for crypto.
Absolutely. I would definitely agree. I mean, I think a trend on this channel, at least since we've been doing this, has been talking about how it's obviously, certain exchanges and certain cryptocurrencies kind of cater more towards the consumer demographic, but at the same time, what actually drives price action is institutional adoption and institutional activity. It's going to be those big $5 million buys, or new exchanges being launched, or someone adding Bitcoin to a fund like Fidelity, adding it to their kind of retirement options in terms of asset allocation for 401ks. Things like that. That's what's going to get Bitcoin to like the holy grail of 100K, right? It's not going to be, you, me, and Joe Schmo buying $250 on our DCA, weeklies, whatever it is. So I think that this is kind of the direction we wanted to see. But at the same time, Mata, to your point, I'm a little bit skeptical because it seems so teed up after Gary Gensler talking about specific cryptos that aren't securities, and then all of a sudden, a month later we have this coming out, and it's like, there probably a little bit of backdoor action, but I think that's just the way this stuff goes.
Right, like it feels good, right? Obviously, we've seen a big pump lately. We always like to see that for our own personal bags. It almost feels like the long-term outlook is a little bit interesting at this point, just because it's like, this is what we've been waiting for, but the way that they approached it, if that is the case, feels a little bit, I don't know what the word would be, maybe like gimmicky, right? It's like Gensler comes out, goes, for the neck of the two biggest exchanges that have been trying to get more clarity around this. Of course, institutions coming in, big money coming in, that's only going to be better for the space from, positive development, all those things we've been talking about, liquidity, and of course, regulation as well, right? Because now they're going to take that a little bit more seriously. There's going to be a lot more eyes on that. There's going to be a lot more effort towards that. But it just seems so interesting for them to be so almost what felt like against it. And now coming back and saying, okay, but as if these guys are doing it, then it's fine, right? I think that does come back to, there are a lot of cryptos on the market, and we've talked about this on our podcast multiple times. Probably that shouldn't be there, right? There's a lot of Ponzi schemes. There's a lot of things that do not have value, which I totally understand that. But at the end of the day, everyone who's getting involved in the space, they take these risks for specific reasons. And if they want to, risk on certain areas, that's up to them, right? And I think that's the big thing with the crypto space, at least how it kind of grew on me, was like, this is all on you. This is your decisions. Make sure you're being smart with everything. And there isn't like a, entity that's going to come in and save you should something go wrong, right? It's all about kind of the freedom and everything like that. Having this, even though I feel like we're all kind of in agreement, it's a positive development, and having the institutions there is good, it is going to change the industry a little bit from what we know of it. So curious to kind of see what entails after this. And then if EDX markets, does that stay as an institutional specific area? Does that become some of this more competition between some of the exchanges, those sorts of things? But for now, it feels like a good thing, kind of piggybacking on what felt like, a little bit of a bad thing. So kind of interesting timing, if you will.
Yeah. And I'm interested to see what this means for Coinbase. Is this something where Coinbase realizes they need to open up the door for institutional investors and they need to start playing by the rules? It's clear that Gensler will pick his winners. And is that something where, in order for Coinbase to survive, they need to be part of those winners and abide by his rules? The other thing is, sure, maybe in the short and medium term, it's kind of iffy, but a lot of these SEC chairs will come and go, and who knows what this means 5 years down the road. We saw what Hinman did 5 years ago and what that meant to the crypto industry. Who knows what's coming down the road, or who is coming down the road in 5 years? So, maybe we kind of have mixed feelings about this, but at the end of the day, as long as we can bring more people into, the crypto sphere and bring more money into the game, then down the road, we can make more favorable terms. So yeah, a little iffy on it, but I like the move of bringing EDX into the sphere.
Yeah, I agree. Like, I'm definitely iffy on the how it was done and the timeline of it, but I think the goal that it achieves is probably more important than that, in my opinion. Just because whenever I have like a conversation of someone who's not really, into crypto, it's always the risk piece. Like, you always hear them talk about, oh, well, that's how, like, criminals get paid, and that's how, like, they have this whole narrative and idea around cryptocurrency where it's totally understandable if you don't understand the technology, but at the same time, I think what makes all these other investments reliable or trustworthy is that you have a financial institution behind it, right? If JP Morgan Chase wasn't a $1 trillion bank and didn't have the brand that they had, no one would trust anything that's going into that bank, and FDIC insurance wouldn't be a thing, right? So, like, it's just all about how how this type of currency and how this type of investment is backed, and we're at least moving in that direction. I obviously am also always worried about what the SEC and what the government involvement is going to look like on that front, though, too. Awesome. Anything else you guys would add? I mean, I think we covered a lot of good stuff there.
I think that pretty much sums it up, right? I mean, overall, the future of the crypto space is uncertain, right? It's been uncertain for a while. I think the backing of kind of these Wall Street giants in EDX markets, it's a positive development, right? It could lead to more institutional investment, could lead to major boosts for the industry, legitimization in the eyes of regulators, more opportunities. I mean, we all like competition, right? It drives our prices down, our fees down, gives us better service, right? So ultimately, it feels good. I think we're all kind of just in alignment that really interesting timing for them to actually go about and do this. So maybe how it was done was interesting, but overall, pretty good or pro for the market.
And I feel like it's tough to feel good in the short term just because, for the retail, buyer, it doesn't change your day to day in any way. This is just bringing bigger players into the mix and it doesn't affect you. So, yeah, it's interesting. I think it's pretty easy to tell that this is going to be a successful exchange just because of the investors, Fidelity, Citadel, Charles Schwab. It's going to be successful. But yeah, I think we've been saying it, but mixed feelings at the moment.
I love it. Well, great insights all around. Again, if you guys found anything insightful, enjoyed the content, make sure to like and subscribe. And also comment below. We'd love to hear your thoughts. I mean, a lot of exchanges started out really promising. FTX comes to mind, right? A lot of big investors from that side, I believe Sequoia, a lot of these same guys were in it. So would love to get your thoughts if you think that this is really going to last and what you think in terms of the future of crypto with EDX. So appreciate you guys watching, and wag me.